Good afternoon, everybody. I'm Paul Ayoub. Welcome. I'm a partner at Nutter and a member of the executive committee at Nutter. And I want to welcome you to our program focused on the 2020 elections and the ramifications for New England business. I'd like to thank the Association of Corporate Counsel for the opportunity to present to its members. As many of you know, Nutter's been a longtime supporter of ACC's Northeast chapter, and we always look forward to this event. Usually we'd be hosting this in our Seaport office, but like everything else related to this year, we've adjusted to the new normal and are happy to present to ACC membership this virtual program. So it's sort of a special way of doing it, but also fitting because we have a special panel that we're excited to have with us. And so with that, you'll see on the screen our panel. What I will do is just quickly introduce everybody and then quickly acknowledge everyone, and then we'll just do longer introductions as we go along. So we're pleased to have Tom Curry, who's the co-leader of the Banking and Financial Services Group at Nutter, former controller of the U.S. currency, and Eileen McAnneny, who's president of the Mass Taxpayers Foundation, and Marc White, president and CEO of Ethic, a wealth bank. So all of you welcome and look forward to the conversation. So Eileen, I'm going to start with you, and let me just do a quick introduction. Pleased that you all can be with us. You all have very different perspectives, and in the aggregate will bring a very robust conversation after initial remarks. So Eileen is president of the Mass Taxpayers Foundation. She has 20 years of government relations and public policy experience. In addition to being president and CEO of the, she was president and CEO of the Mass Society of CPAs, director of public policy at Fidelity, and also senior vice president and associate general counsel of government affairs at the Associated Industries of Massachusetts. And previously had served as staff attorney for the Joint Committee on Revenue for the Massachusetts legislature. So a real robust background in Massachusetts and tax policy and government policy, and welcome your thoughts. And I'm particularly glad you could join us because Eileen, over the past 2 years, I served as chair of the Greater Boston Chamber of Commerce, and it's been just wonderful to hear your perspective as and especially in this last year when we were dealing with COVID and some of the challenging issues of our economy. And I've always appreciated your thought leadership and look forward to hearing your thoughts this afternoon. So Eileen, we'll turn it to you.
Well, thank you, Paul. I very much appreciate that kind introduction. And it's great to be on this panel, even if it's virtual. So I appreciate the opportunity very much. As you had indicated, I work for the Mass Taxpayers Foundation, which is a nonprofit, nonpartisan research organization focused on the fiscal stability and long-term economic growth of Massachusetts. And so I'll frame my comments around those two focus areas. And for me, I think one of the big questions about the Biden administration is what they will do. And we're assuming that there will be a Biden administration for purposes of this panel. But what they will do with respect to federal financial assistance for states and municipalities. And I know the conventional wisdom is it's much more likely that there will be additional aid for states and municipalities under Biden, but I'm not so sure about that. And I say it for a couple of reasons. One, I think in a lame duck session, which is between now and when he's actually inaugurated, it looks very unlikely that anything will happen. But once he does become president, like any legislative body or any new person taking on a new job, there is some time like to organize, to get things ready and so forth. And so I think it will be time, but there will be a lot of competing interest for the president's attention. Most notably would be the pandemic and certainly distribution of the vaccine and some other things. So, you know, we'll see. And I think also because Congress will be very divided, that it seems unlikely that the Republicans, if they do retain control of the Senate, would be very likely to go along with a package, or at least as generous as perhaps the Democrats had initially proposed. given that the $1.8 trillion amount was rejected. And so I think there's a lot of things that may make it not a slam dunk. But, and so I think if there is federal financial assistance, obviously that's of great help to states as they wrestle with the pandemic and the economic fallout that has resulted. I think the more interesting thing to consider is if there's not additional federal financial assistance, because we know that most states have seen a decline in revenue as a result of the pandemic. Fewer people are working, there are fewer purchases, and so their tax revenues have been affected. And for Massachusetts, I can speak to it. For the current year, fiscal year 2021, which began in July, the expectation is the state will be looking at about a $3.6 billion revenue shortfall. And they have been able, both the House and the Senate, put forth budgets very late compared to other years. They're still trying to finalize it as we speak, despite the fact that we're 5 months in. But I think part of that was they were trying to figure out whether there would be federal financial assistance and trying to avoid some budget cuts. But for fiscal year 2021, I think there's a lot of federal money they still have access to, which will enable them to provide a budget without big broad-based tax increases. But come fiscal year 2022, if there isn't federal financial assistance, then they're going to have very sizable revenue gaps. And I think they will struggle with trying to find the right balance between, what is good for folks who need services that the Commonwealth provides and what is good for the recovery, right? And there's some tension there. And so I think trying to strike the right balance, particularly as it relates to some of the fiscal and economic policies, will be challenging. The only other thing that I would comment on, because I know we're going to get to a discussion, I want to limit my remarks, but I think Massachusetts and many Northeast states won't be constrained by, I'll say kind of the divisiveness in Washington, which will require them, they're not, I think they're not going to be able to enact policies that are too far extreme on either side, just given the limited margins that that branches in Congress have. And I'm sure the president will try to use his influence to change that, but I think he may be limited in that ability. But I think Massachusetts, at least, won't be constrained by some of that divisiveness, because there is a supermajority, of Democrats in Massachusetts, and Democrats gained seats in this past election, and so Massachusetts could very well become kind of a laboratory for some of the policies that I know progressives are trying to implement, particularly as they relate to taxing businesses and the wealthy. So I think it's going to be kind of an interesting dynamic, and and we'll see how the President Biden is able to change that. But I think there may be some limits, certainly in Washington, but not those constraints in some of the states. So I'll end there. Thanks.
Thanks, Eileen. And two things. First of all, you did raise a point I meant to mention at the beginning, which is since we are among, except for Marc White, all lawyers, one of the distinctions you have, Marc, is I think you're the only non-attorney either listening or on this panel. So even more important to have your voice. But we recognize that the Electoral College has not convened, but we are making the assumption that Joe Biden will be president in 2021. So thank you. But I have a question. You talked about Washington. So in your experience, since it goes back at least a couple of decades, how much, there's policy that's adopted in a platform at a convention, and then there's what actually happens. And how much really can happen, let's say even in the first year or two, does it take, what's the pace of change typically? Because different people have different views that I'm just curious as what you've seen and experienced, right?
So, I would say it varies. And certainly I think if a president is elected and then controls both parties of Congress, that's a very different exercise than if it's a divided Congress. And I think the margin by which a president wins. Also, if there's a mandate from the American people for his leadership, I think that provides a lot more leeway and opportunity than when it's a close election. And so I feel like past experience may not be very indicative of what will happen this time, because it feels like this election is different in a lot of material ways.
Great. Thanks very much, Eileen.
Sure.
Tom, I want to invite you to share some remarks next, but let me just do a quick introduction. Tom Curry is one of my partners at Nutter. He co-leads the Banking and Financial Services Group. He also chairs the Milken Institute's FinTech Advisory Committee. Before all of this, however, Tom's had just a real storied career in public service. He was appointed by President Obama as the U.S. Comptroller of the Currency. He served as a member of the board of the FDIC for many years, and he's a member of the group of governors I'm not going to get this right, hearing supervision, and also was the Mass Commissioner of Banking for 5 different governors of Massachusetts, both from 1990 to 1991 and from 1995 to 2003. So really an incredible career, both in the public sector and now, fortunately with us at Nutter in the private sector. So Tom, love to hear your thoughts about what we might expect in the next 4 years.
Thank you, Paul, for the kind introduction. What I'd like to do is talk about the potential Biden administration's impact on financial regulatory policy. And what I think is important to recognize that you can't have a recovery from the pandemic or a healthy economy without a strong, well-capitalized banking industry. And I think we're fortunate up to now to have had, under the Obama administration, a real push after the global financial crisis to have higher and better levels of capital in the banking industry, higher liquidity, and better risk management. And all those steps actually benefited us when the pandemic hit. And I think the economy is in much better shape because of that. So it's important. I also want to talk about the prospects for federal legislation affecting banks and some of the changes that can happen, regardless of the composition of Congress within the banking agencies, the regulatory agencies themselves. In terms of financial legislation, I really don't expect much in the way of substantive legislation, given the possibility of a Republican Senate and a narrow Democratic majority in the House. Passage of such things like cannabis, banking services, climate risk, postal banking, and other progressive authorities, or industry regulatory relief proposals, such as the Bank Secrecy Act, anti-money laundering area, are probably in doubt without clear majorities in Congress. What I do think is important to the economy and to the banking industry in particular is whether or not there will be a economic stimulus package. The timing and size of that stimulus will really impact the banking industry and the economy. At year end, this is important, the beneficial effects of the stimulus in some of the regulatory forbearance provisions of the CARES Act and what the banking agencies did on things like troubled debt restructuring, the delay of CECL loan loss reserve adoption, community bank capital relief, eviction and foreclosure moratoria. They're all going to expire in one way or another. And without extension, borrower defaults will increase, and the bank regulators will be forced to increase their scrutiny of asset quality at banks in the first and second quarters of 2021. Again, if there is no stimulus relief to get us through the pandemic with the vaccine and hopefully increased therapeutics. Turning to the banking agencies, the federal banking agencies, I do think there's going to be a change in tone in terms of prudential and consumer-related priorities. at all of the agencies. The Trump administration has been industry friendly with major regulatory burden reductions and less enforcement actions than the Obama administration. The expression I think is apt, personnel is policy. So key leaders at the OCC, the Office of the Comptroller of the Currency, the Consumer, CFPB, the Consumer Protection Bureau, the FDIC, and the vice chairmanship of the Fed Board for Supervision are likely all to change at some point from January through 2023. And the tone at the top is going to dictate substantive policy priorities, both in the safety and soundness area and in terms of consumer protection enforcement. Personnel-wise, historically, there are terms of the regulators exceed the president's. That's done for independence, but effectively, there is a great deal of authority for the president to change who's running these agencies. For example, Acting Comptroller Brooks, he was this week, the president indicated an intent to nominate him as comptroller. Whether he's confirmed or not, it is very likely that he will be replaced by the Treasury Secretary once that he or she is confirmed by the Senate. And that's all permissible under the National Bank Act's removal statute. Same thing goes for the CFPB. Director Kraninger will be replaced under a recent Supreme Court case, Celia Law. The president has the ability to remove the director. The FDIC chairman, Yelena McWilliams, her term doesn't end until 2023, but there's going to be an interesting dynamic on the FDIC board as both the comptroller and the CFPB director are ex officio members, and that could result in the board consisting of 3 Democratic members with a Republican chairwoman. Turning to the Fed, the vice chairman for supervision's term ends in the fall of 2021, and this change could reintroduce more vigorous and less transparent CCAR stress tests for the largest banks. And I think it's interesting that in this lame duck session, there's an attempt to push through 2 nominations on the Federal Reserve Board in order to foreclose Biden potential nominees come January. Turning to enforcement activity, I do think safety and soundness enforcement actions or remedial actions are likely to increase in 2021, primarily if there's no further stimulus package. The high unemployment is going to result in weaknesses in consumer lending portfolios, commercial real estate, and those regions and sectors of the economy hardest hit by the pandemic, such as small business, service industries, hospitality, and entertainment, are all going to be likely weak spots. In terms of merger and acquisition activity among regional banks, I think they're going to receive greater antitrust and congressional scrutiny, and they may or may not be discouraged in some cases. In terms of consumer protection, the OCC's Community Reinvestment Act regulation amendment, that's likely to be amended after the Fed changes its potential rule. Consumer protection, internal reorganizations that occurred under the Trump administration that weakened, for example, at the CFPB, their enforcement and fair lending units, they will be given more autonomy and freedom to bring unfair deceptive acts and abusive acts and practices or fair lending and redlining actions. Other changes may occur at the OCC where the disbanded compliance division might be resurrected, and evidence of discriminatory credit activities will be more heavily weighted, I think, in Community Reinvestment Act performance ratings for banks, and again, in any future merger and acquisition activity. So that's kind of Paul, the overview of the impact. And again, I think to summarize, it's more a case of personnel being policy than anything else. And I would not underestimate the impact of that over the next 4 or more years.
A lot going on there, Tom, and I appreciate that overview. It's really quick follow-up question, because I get it about personnel being policy. It's true, I think, in the public and private sector. How some of the key appointments that you referenced, how long typically does it take? Because there's so many appointments to be made on the federal level. So we're focused on this, but how long in your experience is it between the inauguration and sort of rotation of the key positions?
Yeah, I've gone through the confirmation process twice. It's not fun, but it's worthwhile if you make it through. But I think the priority and what's happening now is there's a vetting of the cabinet level positions. You want your cabinet members in place quickly after assuming office in January. Traditionally, the Senate has been accommodating presidents of either party. There have been some suggestions that the Republican Senate may object to unacceptable or more progressive nominees, but there's some back and forth exchanges before nominees are actually announced, and there's really a strong effort to work those nominations through Congress. Other agencies, the regulatory agencies, are the second tier, and they'll happen in the months after the cabinet's put in place.
Great, thanks, Tom. Appreciate the remarks. And Marc, let me turn to you. Thank you for joining our panel and being our sole non-attorney. Marc is President and Chief Executive Officer of Ethic, a wealth bank. Has over 35 years of leadership experience building private banking and wealth management businesses. For example, was vice chair of JP Morgan's private bank and chair of the New England market leadership for JP Morgan. And before that was executive vice president, managing director of Fleet Private Client Group. And in the mid 80s to early 2001 was at Credit Suisse First Boston, including being managing director of the New England region, which is one component of the perspective Marc will bring. But the other is the civic and charitable perspective, because with this economy, obviously, we think a lot about the nonprofit segment. And Marc has been particularly involved in having served or currently serving on the Boys and Girls Club boards of the Boys and Girls Club of Boston, the Peabody Essex Museum, Governor's Academy, Tower School, the Wang Theater, and also leadership roles with Breast Cancer Research Foundation, Bridge Over Troubled Waters, and near and dear to my heart, on the Parents Leadership Council of my alma mater, Brown University. So really looking to hear from your perspective on both aspects of that, but maybe just lead off with some introductory perspectives, and then we can do more of a round robin discussion, Marc. So thanks very much for joining us.
Paul, thank you for having me, and it's a pleasure to be on this today. I think being the only non-lawyer, maybe you let me in because my father practiced law for over 60 years. I have two brothers that are lawyers, and my daughter just graduated from law school. So maybe that was the pass you gave me, but thanks for being here. What I really want to talk about today is as you said, is sort of, what keeps me up at night, what I think is important, and from where I sit. And it's almost more emotional and psychological. I think we have to stay the course. We are, if you think about everything that's going on right now, and you've got the coronavirus spiking and surging across the country, and we're headed into the winter months. I think that the most important thing that needs to get done, and Eileen and Tom referenced it, is we need a stimulus package. There is no way around it. It is critically important that Washington puts aside, all their differences and comes up with whether it's $1.5 trillion, $2 trillion, $2.5 trillion stimulus package. I think it's crucial because, as we all know, there are so many people out there across the country, small business owners, and in every state, in this country, that are in a difficult shape. And you think about the bright light, if you will, of the research information in the last few weeks as it relates to places like Moderna or Pfizer. So So there is a hope out there, but it's going to take a period of time. It could be 6-7 months in order to get to the point where hopefully we can widely distribute that vaccine. And so what I think people need now most, those that are in difficult shape and dire straits, is they need some level of hope that bridges them through the next 5, 6, 7 months. And I think it's absolutely critical that there is an economic stimulus plan, and that money gets in the hands of those people who need it most. I think that bridge is critically important. And and it's not just a dollar and cent stimulus package. I think one of the other things that is critical is that people need to be prepared. And that's one of the concerns that I have right now is, when it comes to the vaccine, do we have an execution plan on how to distribute that? If there is a stimulus plan, and I hope there is, frankly, there has to be. We need to make sure we, as this community, business owners, people that are involved in big corporations, we need to make sure that those that receive the stimulus money are prepared, that their chains, supply chains and everything's are ready to go when the faucet is turned back on. Let me just give you a couple of statistics. The S&P closed yesterday up 14% higher than where it closed a year ago. So we've now faced 9-10 months of coronavirus, exhaustion, fatigue, and yet there's a segment of the population out there that is looking at the markets and saying we're up 14% year over year. Well, guess what? They do have a fair amount of money, so available when the time comes to spend again, to travel, to do all the things that all of us are hoping happen sometime next year. And yet there's a segment of the population, almost 50% of America does not have either direct access or indirect access to the markets, indirect meaning 401ks or funds. And so what I think is so important right now is there has to be a stimulus plan. We need to get that money in the hands of the people that need it most in order to provide the hope, because make no mistake, when we get to the other side of this bridge, sometime next spring, next summer, right, when we have the vaccine and it's widely distributed, there is pent-up demand across this country, spending demand, that I think will be unleashed. But if these small businesses, even if they get the money, are not prepared at the time that faucet's turned back on, and it takes them 3 or 4 months in order to get to that point, that's 3 or 4 months of lost income, right? That could be absolutely crucial. So for me, those are the things that I keep thinking about right now, that I wanted to share with you. I think it's the next 6, 7, 8 months in our country are absolutely critical to what this economy looks like beyond that, and then what we look at like as a country and frankly, a citizenship.
Thank you. That's great. Thanks, Marc. And I appreciate those remarks. It's interesting to hear you talk about the emotional side versus the sort of the quant side or the technical side. So I just want to click down a level on that, because you're especially with all the folks you're speaking to, you see a lot of a broad range, both people who are borrowers or have relationships with your bank, but then in the philanthropic world. So I'm thinking particularly about small businesses, and you mentioned that. So how do you see them surviving even between now and the next administration, right? Because it doesn't seem like I'm not sure much is going to happen. Maybe there'd be a stimulus package, but the next 60 days could be a very tough time just because of the uncertainty and the transition. I'm just curious if you could go down on another level and give us a little more of your thinking on that.
Well, it's a good question, Paul. I think the next 60 days are crucial, certainly, into January. And obviously part of that is, I think, is, their ability to survive is education. You talk about preparedness, or I did, but also education in the sense of what are the things that they can do to survive. There are a lot of small businesses, that we talk to, or some newer businesses that have been started in the last few years. And so I think, firms like ours need to do a better job, continue to do a better job of education to make some of these businesses more aware or aware for the first time of what resources might be available. So I think that's a component of it. I think the educational process of where obviously you think of big corporations and they've got a lot of resources, a lot of access, and they can avail themselves of those. There are a lot of smaller organizations that don't have that access, and so I think education and being able to help them figure out what they have access to is critically important. Paul, I can't hear you.
Paul, you're on mute.
I want to platform, thank you. Marc said, maybe ask both you, Eileen, and Tom to comment on that as well in terms of the small business sector. It's such a prominent part of the Massachusetts economy. Your perspectives on how they are doing and how they will do in this transition and under administration, and maybe also talk about locally what you've seen in terms of support, because I think this is an example where the private and public sectors have come to actually proudly in supporting our small business economy. But Eileen, what have you seen and what are some of your perspectives on that?
Well, thanks. And I guess I would just start by saying, I think we should really applaud the innovativeness and the ingenuity and the flexibility of small businesses in America. I mean, you just think about, how restaurants and retailers and others have adapted and figured out a way to stay in business. In Melrose, where I live, there's a restaurant that has the tent and the heat lamps and lights outside, and they've done really everything they can. And they actually have what seems to be, a thriving business. But I think we shouldn't lose sight of all the issues that have come from the pandemic. There have been some glimmers of hope. And I think kind of the sparking of the entrepreneurial spirit of Americans is perhaps one of them. But having said that, I think small businesses do need our help, particularly as we go into the winter months. And I think most Americans need to be just more conscious of how they spend their dollars, right? So it's very convenient to order online, get it delivered the next day and so forth. But I think we have to make it a point to support Main Street businesses during this time, right? To make sure there are Main Street businesses, several months from now, when we want them all to be there and thriving. So I think some of it is just deliberate choices that we as consumers need to make. But I do think the legislature, certainly in Massachusetts, is very mindful of trying to help small businesses. And, there are some funds that are being set up that may provide grants to them, which I think will be key. I also think it's really important to not add too many new costs onto businesses. And kind of surprisingly enough, at least from my perspective, there are some proposals in the budgets that are pending and so forth that may add cost. So I think we just have to be really mindful of policies that are implemented, certainly that were implemented prior to the pandemic that are coming online and may have impacts, and maybe rethink some of them. And like I just look at in Massachusetts, there are several cost increases for business. And I do know it's a fine line. We want to make sure we're providing people who need help with help. But come January, there will be increases in the minimum wage. There'll be health insurance premiums are expected to go up by about 8%. Unemployment insurance costs are supposed to increase by over $300 per employee. There's a Paid Family and Medical Leave Act that goes online that will have some cost associated. So I think we just have to be careful. And I keep, saying this, but I think the resounding theme is balance in how we approach this is going to be critically important, because we want to help people for sure, but we don't want to add too many costs onto business so that they're no longer viable given the current economic environment.
Yeah, no, I appreciate that. Mark, and I want to go to you, Tom, but Mark, with the folks with whom you have relationships with Ethic, what are you hearing they're saying and the concerns that Eileen has raised, and maybe just share your perspective. Then I want to go to you, Tom, in terms of some of the regulatory pieces that you've experienced in the past as a public official. But
Well, Paul, I guess what I would say, to the first part of Eileen's response was, I mean, she's spot on. I mean, if you think the ingenuity, I mean, for a lot of these people, they basically try to figure out how to survive or to the best of their ability over the last 6 months and got incredibly creative, which says a lot about, frankly, I think the human spirit and incredibly creative in trying to maintain their businesses, even at some level, 25, 30, 40% of what it was. And so I think that's critically important. And I'm not in a legislative body, but I agree that there's got to be, that we have to be very mindful, as it relates to any increased costs, given this environment. And these are the kinds of times where if you wanted to do it, but it's not proven right now, then some of these things should be deferred, because there's a fine line, and this is what I've heard from some of our business owners. I mean, when you're trying to survive and you're able to generate 40-50% of your income or 35% of your previous income, and you're hanging on and you're keeping some people employed, right? If there's a 5%, 7% increase somewhere else, that could be the tipping point that ultimately causes some of these firms to completely shut down and fold. So I agree with Eileen that we've got to be very cautious and cognizant of any decisions we're making, as far as, over the course of the next year or two.
yeah, Tom, do you want to weigh in here
Sure.
or talk about a regulatory perspective?
Yeah, no, I think, it's clear, and we've seen this throughout history, that small businesses have an outsized impact on the economy, especially on employment, new employment, or maintaining current levels of employment. I think it just underscores the importance of assisting small businesses through this extraordinary period. And that's why, the stimulus package that includes a new appropriation or reprogramming of existing appropriations to the payroll protection program. That includes the possibility of having forgiven loans to support these businesses is really essential. And that's why I really point to, and as both Eileen and Marc have, the critical need for Congress to come up with an economic stimulus package. It's essential. There's certain things that the state can do. Back in the New England banking crisis, programs were established for loss sharing on lending to small businesses to encourage banks to lend, and things like that should be dusted off and reestablished. If we lose small businesses, we lose economic vitality, communities are affected, and people lose jobs and services that they depend on.
Thanks. We have a question from one of our participants, and let me just read it to you. The question is, do you think that financial institutions and New England businesses generally have relaxed their compliance efforts during the last 4 years because of President Trump appointed personnel, even though most laws and policies have not essentially changed? And then comment, while enforcement risks may change with personnel, not sure why companies should approach legal compliance differently based solely on regulatory personnel changes. I want to know if anyone would like to comment on that, whether you've seen a difference in that way.
Well, I'm happy to go first since I do work for a bank. We have not. I can tell you our compliance group is as diligent today as they were 4 or 5 years ago. In fact, we have more people in compliance, and as it relates to risk management of the institution and cybersecurity and everything else. So I can speak from my own personal experience that we have not relaxed at all. Compliance is absolutely critical. To any financial institution, and my guess that probably holds true at others, but I can't speak for them.
Great.
I'd like to add something, Paul. I think the pandemic, with the increased use of remote work environments, actually has increased, I think, potential for increased conduct risk issues. There's in banking organizations, especially those with trading operations, it's really important to be able to observe the conduct of individuals. There's an ameliorative effect of having people together for compliance purposes. So I think that's an area where there may be potential near-term compliance risks emerging. The point I would make, I think there's a change in personnel is probably does increase the risk of compliance-related scrutiny. There clearly was, I think, a reduction in emphasis on the enforcement of community reinvestment and consumer compliance-related issues under the current administration. And I do think that there's going to be a big impact in terms of tone and posture and the way the regulatory agencies handle things like crypto assets and financial technology.
Great. Eileen, I'll give you a chance, but I have other questions. Okay, so I guess what I'd like to get to is with a new administration, where we see which industries and areas in New England are going to benefit with the new executive branch administration. And maybe we ask that a different way, which is how will it affect healthcare? Obviously, one of the big it's a big focus point during the campaign and also literally affecting everyone's lives. But Eileen, do you want to take that or?
Sure. So, I think I would say in general that many of the sectors that are really important, again, I'm sorry, I'm talking about Massachusetts because that's, where I operate, but you think about healthcare, obviously a huge sector, higher education, very important. And then the synergy that having those sectors brings to things like, pharma, biotech, and the life sciences. And I do think under a Biden administration, there'll probably be more money forthcoming for those sectors. And I think that will be critically important because they're undergoing change. But I think with respect to federal monies, what's very interesting about that is, so we're already seeing more money for what's the Medicaid program in states. There's a higher reimbursement rate by the federal government. But that can be a double-edged sword for lots of healthcare providers because those reimbursement rates typically are lower than what they would get paid by folks who are commercially insured. So to the extent that that is expanded, it could put financial pressure certainly on healthcare providers. So it'll be interesting to see. I also think things like telehealth and that type, those things that have greatly increased during the pandemic in how they're reimbursed by federal programs will be critically important. I'd say there are just a couple of ancillary federal, policies that'll impact Massachusetts greatly. And certainly one is immigration. Massachusetts has an older population and one that's, that's actually on the decline, but for immigrants. And so to the extent that there is a less restrictive immigration policy, that could certainly help as the economy recovers to grow the workforce. So I think in the final federal policy I'd comment on is transportation. I think President Biden obviously took the train every day from Delaware when he was the senator. I think he very much supports public transportation, particularly trains, but I think for places like the Northeast where there is robust public transit, we could be big beneficiaries under a Biden administration.
Yeah. Tom or Marc, do you want to comment on that?
Well, the only thing I'd add is I know earlier in the week, President-elect Biden met with labor union leaders and CEOs of retail tech companies and the auto industry. And, so not that, I mean, that's just sort of one indicator, but clearly some areas, in addition to what Eileen said about healthcare, that I think, are areas they're focused on, in trying to recover the economy, grow things.
Tom, did you want to comment?
No, I agree with both Eileen and Marc.
So with COVID-19, and by the way, with COVID-19, obviously things have changed. I refer to that as the new normal. We don't know what the new normal really is. We're going to be in this for several months. I'd like you to reflect on how much of what has changed is likely to be permanent and how that benefits or hinders our economy, really regardless of the administration. But if you want to overlay it with how Biden administration policies may impact that as well, love to just get your thinking on that, because we're in this every day. So it's not necessarily a Biden presidency question, but really a question of what are we experiencing and how does that impacted potentially by federal policy, but just by the acceleration of things like digitization and virtuality and all. Eileen, maybe you must be talking to folks about this and hearing it from your membership. So.
Sure. I mean, I can only comment anecdotally, but I do hear from a lot of business leaders. And I think our economy will be changed by the pandemic in fundamental ways, some of which we haven't even begun to see, perhaps. I mean, I think the most obvious one to me is just the increase of remote working and what that could mean long term, right? So, it seems like people like to work remotely if they're able, and that will probably continue long after the pandemic. But that has fundamental implications, certainly for our cities, right? I can't help, I'm in the office now, I happen to be in Boston, but I think about, if you don't have people in the office towers and you don't have them buying their lunch or buying a cup of coffee or going out to dinner or meeting a friend, that fundamentally changes the fabric of our cities. And what that means long term, certainly fiscally and economically, I think remains to be seen. But something more granular, as people can decide where they want to live, and there are no restraints, right? If you can work remotely, you can live really anywhere. And we're seeing that happen already, and certainly in San Francisco and the Bay Area, as people are migrating outside to lower cost places where they have maybe a better quality of life or more open space and so forth. And I wonder what those implications will be for the Northeast, which is, a very densely populated part of the country, and particularly around the cities and so forth, and kind of, what all this means. I don't know how federal policies will impact that necessarily. I think a lot of this is more business choices that are made in the coming years about how they organize and what their workforce looks like. But to me, those seem to be some pretty big changes that we'll see.
And Marc, I know we're going to have to lose you in 5 minutes because of a commitment you have. So I want to turn to you either to answer that question or also talk a little bit about ethic. And this is something that's you've been with for a while, and just how you're positioned in the Massachusetts economy and the national economy, and in the focus of your bank, and in the last year, just so we can learn a little more about ethic and how it relates to maybe particularly the Massachusetts economy, since that's our focus.
Sure, I'll give you, thanks, Paul. I'll give you the very short version, but basically, the idea for ethic was we wanted to build a bank that combined technology, and I'll address some the second half of what you asked that Eileen answered. But basically, the idea was to build an institution. Ethic happens to have a federal charter, so we can lend money and take deposits anywhere in the country. But what I felt very strongly about when I decided to do this was to build an institution that combined the following, where we had all the capabilities on the lending and banking side and on the investment side. One major idea we had was to build out a digital platform so that we could do everything for our clients digitally, electronically, and combine that with the human interaction and advice. And And then the last thing I'll say is the goal of the bank was to really be able to do all those things and have the capabilities of any other big financial institution, but that also had old-fashioned values where we were relationship driven and where client service was critically important. I mean, I feel very strongly in 2020 that there's no reason why you can't have all the capabilities of a very strong financial institution, but do it with what I call old-fashioned values, where you understand the client, you don't get 800 numbers, you can pick up a phone and call them, and it's not just about what we're providing you, but our goal was to provide advice and guidance, not push products, to help educate. As I talked about education, I think that's critically important. And the last thing I'll say about that is that one of the major reasons I did this and wanted to do it in Boston was I felt it was important for the institution to have a social conscience. I didn't want to build another financial institution. That's all we did. I wanted to build one that was very involved in the communities as we grew, and was helpful in the communities. And so that was really the idea behind it. The world doesn't need another bank. Our feeling was it would be a different kind of bank for our clients. And that's really the goal. To what you asked Eileen, or what Eileen answered, I think one of the things that we've seen is that I think will change is in the banking world, many banks have a lot of branches, a lot of bricks and mortar. And what's become clear over the last 6 to 9 months, and these financial institutions have been talking about this for years. How do we improve our digital capability? How do we allow clients greater access to mobile banking and all the things that they need to do without walking into a physical location? What the pandemic has done, I think, is sped up that process, or the adoption of that process a little bit. As we know, if there's a 20-year-old, 30-year-old, they're not going into a branch anyway, and probably never have. But now you have all the people, the generations that are a few years older over the last 6 to 9 months said, I didn't really understand how to use the technology, but I certainly am not going into a building. And so they become adopters, if you will, of that technology. And so I think that the banking landscape is going to change over time because of COVID, in the respect of becoming more digitally enabled for their clients.
Great. Well, thanks, Marc. And I know you have to pop off, so we want to thank you. And Tom, I want to come. So thank you very much.
Thank you very much. I appreciate being on, Paul. Thank you all.
Great. Thank you. And Tom, I just want to come back to you. So having been a veteran of transitions, and curious as to, we talked about how long it takes for personnel, but also in terms of policy. I mean, what's the pace of policy change? Because personnel may be policy, but it must take a while. And I just love to just give some insight to those who are listening about what the dynamic is, and what you experienced when you went through this, and what we might expect.
That's a great question, Paul. What happens in most agencies, the political appointees are just sitting on the cap of a career organization. So you can certainly have the authority to outline and set out what your policy priorities are. But if you want to have a lasting impact on the agency, you really have to have, I think, significant powers of persuasion. You need to explain to them why the shift is appropriate, whether it's from a congressional directive, a presidential directive, or that it's the best practice from a supervisory standpoint. And at the end of the day, you've got to appeal to people's professional pride and their willingness to do the right thing and to improve their performance. But you may run an organization with $1 billion+ annual budget, but unless you get the troops behind you, you could be leading a charge with no one behind you. So again, it's your leadership capabilities, your mission is really important.
Well, I just want to say editorially, having been your partner, I've experienced your persuasiveness and your leadership, and I appreciate it greatly. And we're at Nutter fortunate to have you as our client. So thank you. And I can imagine
Thank you,
how
Paul.
persuasive you are in the federal and the state government. People don't get appointed by 4 or 5 governors just unless they're widely respected universally. So thank you. And Eileen, let's end with you in terms of any final reflections you have, bring it back to Massachusetts and the Mass Taxpayers Foundation, and maybe some of the priorities you see in the year coming that you might not have touched on and want to go a little deeper on. We have just a couple minutes remaining. I'd love to hear from you.
Sure. I mean, I think I would just sum up a lot of what I've said, but I feel like the role of an organization like the Mass Taxpayers Foundation, we try to be objective, we're data driven, we try to just provide useful information to decision makers to help in the decision making process. I think the role of an organization like ours is critically important, you know, always, but now maybe more than ever, just because there are so many issues, you know, of a fiscal nature and of an economic nature that could have long-term repercussions. And so being able to provide data, try to be constructive and offer recommendations, you know, it's just a great thing. I love that I get to work in an organization that tries to be positive and play an important role. And I think there's no shortage of issues that all states will be facing, right? I mean, and there's so much happening, just the changing nature of work. I think, you know, again, like the need for some social services, the need to innovate, maybe think about how government delivers some of those services differently to make better use of the resources that they have and extend those resources maybe beyond what they're able to provide now. And there's just an awful lot to unpack, I think, in these challenging fiscal times. So no shortage of work for folks like us to be working on.
Yeah, and I have to say, in all my years, not only practicing lawyer, but being involved in many civic organizations, we've always looked to your organization for just that, for data and for straight up analysis that we can react to and help set policy, regardless of where we are ideologically or politically. So it's served a real purpose for a long time, and we appreciate all that you do. With that, I want to thank you, Eileen and Tom and Marc, and for the opportunity to have this discussion with you. And thank you to the ACC for allowing us as Nutter to sponsor this, and I wish you a good day and happy Thanksgiving.
Thank you.
Paul.
Yep.
Bye-bye.